should I save for my life insurance or should I get life insurance? So I was speaking to a client of mine last week who says that she needs about $50,000 for her funeral. $50,000 just to make sure that whenever she passes away, there's money there so that her funeral is paid and whatever last expenses she has is paid off. So I told her, well, it will actually make sense to do a life insurance policy for that. And then she said, but Felix, if I have the $50,000, why would I need to do life insurance? So basically explored it with her, and I'm going to explore it with you to show you why, okay? So first off, if you need $50,000 for your funeral, you can have the $50,000 there if you have it already, or if you do not have it already, then you basically have to save up that money, but you need that money tomorrow because really and truly you could die tomorrow. And for us to do something that is closest to the life insurance as possible, meaning that it is not taxed and you get the actual $50,000 on the day of death, we basically would have to put that money into a TFSA. The TFSA is the account that would be closest to life insurance. It is not really close, but in all the accounts that we have in Canada, it would be the TFSA, and if you're from the US, it would be the Roth IRA, which is basically the US version of the TFSA. So we're going to say TFSA, and we're also going to put Roth IRA. Okay, so on one side we have the TFSA and the Roth IRA, which is basically tax-free. So on the day of death, what's in there is what would actually be paid out without being taxed. And we have the life insurance policy, a whole life insurance policy. So let's take that $50,000 and we're putting it into the TFSA, all right? So right from the jump, if she already has the $50,000, we're going to put it in the TFSA, and to make sure that there's no fluctuations, to make sure that for sure we're going to have that $50,000 there, we can leave it in cash or put it in like a savings account within that TFSA, which would pay a higher interest rate on it. So if we're looking at today, the interest rate should be somewhere around like getting a 3% interest rate, which does actually change, by the way. Okay, so it could go higher, it could also go lower, but right now it's around a 3% range. So that $50,000, right? When I thought about it, I said, okay, what if we could achieve, she's basically 57 years of age, right? And I'm like, okay, Sandra, let us see if we can do something better than keeping the $50,000 in an account, okay? Because it will only ever be $50,000, and basically you have to pay $50,000 to have $50,000, you know, there. With the life insurance policy, on the other hand, you don't necessarily have to pay $50,000 in order to have $50,000 there on the day of death. So that's number one. So let's just say, since this here is a life insurance policy that goes over a period of 20 years, we can say, okay, what is 50,000 divided by 20? That is 2,500. But I said, you know what? I actually want to even make it better, because when I did a policy quote for $2,500 per year, it gave way more than $50,000. So I'm going to tell you what you actually have to pay. So if I had to create a permanent life insurance policy that would pay out the same $50,000 that's in the TFSA, I would basically put an insurance contract to be, I could get it at $1,552.49 per year. And that will instantly create that $50,000 that she would need on the day of her death. Now, remember, this year we're only paying for 20 years. So if you're paying for 20 years, right, what is the total that you would really have to put into that policy in order to get that same $50,000? So let's times it by 20. So right from the jump, as you can see, instead of having to pay $50,000 for your funeral, you could treat yourself to saving almost $20,000 by you paying only $31,000 into an insurance contract, right? So that's only $31,000 that you're putting into the insurance policy for it to pay out that same $50,000 tax-free. In addition to that, this is basically inflation proof. because this is growing, right? It's guaranteed to grow while it's in the policy. So that money is growing and you do have access to the money if you choose, but we're looking at it as strictly life insurance. So if you're looking at strictly as life insurance, you're only paying $31,040 for this, right? For $50,000. So you're getting to keep basically about $19,000 in your pocket. I don't know what else you need to know in order to see that the life insurance policy for that individual would be way better than just keeping the money in an account. Because what you could do, you could actually put the money in the account, no problem, from the start. You could put the money in the account, and then every year you just take out the money from that account and put into the life insurance policy. You're saving your money yourself so much money by doing that. You know, a whole whopping 19,000 at the end, and then at the end of the 20 years, you're done paying for the premiums, no more payments of premiums. And then the life expectancy that we have for females right now is like 85, 87. So if we looked at how much this policy is going to be worth at 85, let's see what that will do. It would be worth almost 65,000. So not only do you get to save a whole $19,000 on this, you also get to boost the benefit by another $15,000. You will receive another $15,000 tax-free. Okay? And this is why the life insurance policy, know that if you're going to insure yourself, you have to have the 50,000. But if you actually go to an insurance company instead, you don't have to pay $50,000 for a $50,000 policy, right? Something that is actually paying 65,000 at your expected death will pay way more. And really and truly, if it's 1552 annually, realistically you could pass away upon the second year, in which case you only paid about $3,000, right? You paid only $3,000 and it pays out the $50,000, right? If you have any questions about that type of stuff, please feel free to comment or message me directly. And I hope you learned something from this. I hope you do better with your finances. And insurance is one of the gold mines, you know, in actually building and protecting wealth. This is Felix Thomas, your financial doctor, always ready to give you your financial prescription.